You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, NASDAQ proudly launched the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the NASDAQ 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched NASDAQ 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on NASDAQ's full suite of index options products at www.nasdaq-100-options-xnd-NQX-NDX-VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now it's time for a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. It is time to wrestle with the volatility gods, see what's going on once again in the vol markets. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting network upon which so many of you are feasting these days. Happy to be back on Vol Views. We were obviously off last week for the holidays. Don't blame us. It's the holiday schedule. We have to be nice. We have to let people have days off here at the end of the day, listeners. So back again after 2 weeks now. So it's been a little bit. So got to shake off the rust, get back in the old vol headspace here on the show. If you're in that vol headspace, then all we ask is a couple of things on the show. First off, if you like what you hear, throw some stars our way, whether it's on the Vol Views feed or on the full network feed or even on the app you get on any of the app stores. Whichever place, whichever platform you do it on does help new people continue to discover the show. And hey, there are a lot of them. They're discovering the show all the time. So we appreciate you folks take the time to do that. And of course, if you want to go above and beyond, you don't want your broadcast day to end with Volatility Views. In fact, if you're joining us for the Pro today, you're getting not one, but 2 shows after this one. You're getting, of course, Options Oddities a little bit later, which is very much the unsung star of the Pro side. I don't talk about it a lot here, but it's kind of like the secret gem. If you folks are listening to that and you're not finding great nuggets to trade or analyze or at least make you think or go, then you're not doing it right. And you're certainly getting a lot of value out of that show, as well as, of course, everything else there on the Pro Live Access. Giveaways, just gave away our Pro Trading Crate. Tony P, he's been waiting patiently for nearly 2 years now. He finally won a Pro Trading Crate, so he's a very happy camper. The Rock Lobster has all kinds of umbrage. So where do you go to find all that fun? Get your name in the hat for the giveaways, all sorts of fun. TheOptionsInsider.com/pro is the place to go. As we go around the horn, see who's joining us today. First, we go out to the dark and stormy shores of Maine, where I hear tell that the clam pirates are lurking once again. It is, of course, the shores of Maine, where we are joined by the rockingest of lobsters, Mr. Andrew Giovinazzi. Mr. G, glad you could put down the shotgun and crack a mic for an hour or so to talk about all things vol.
Yes, I didn't know if you hear on the voiceover, but one of the clam boats was going by, so thankfully he wasn't pilching my particular cove, but he's off to get somebody else.
Did you get him?
We have a special guest. I'm very excited.
Yes. Did you hit the clam pirate? Did you get him with the shotgun?
They still frown on that here.
Oh, I thought you were an unincorporated state. There was no law,
Yeah. Yeah. So actually, I like our clam pirate because he ran for town council. So
yeah, he bribed you with a bunch of clams.
And he does drop the half a peck or half a bushel every once in a while on the dock. So
if you're wondering, listeners,
I can't go just shoot him now.
Andrew's very easy to bribe. Just a bucket of clams every now and then. And he's your man for life over there.
Yes.
The rockingest of lobsters. So he has put away the shotgun, alas. But joining us today on the old NASDAQ hot seat, our old buddy, Mr. Kevin Davitt, on assignment this week. So taking over the NASDAQ hot seat, once again, our old friend, the once future and now present Dr. VIX, a.k.a. Mr. Russell Rhoads. He's the volatility man about town. You probably read about half a dozen books that he's written out there, including quite a few on vol. He also moonlights as an educator over there at the Kelley School of Business. A lot of different hats this guy wears over here. Welcome back, Mr. Once and Future Dr. VIX, sir.
I am honored to be here. Absolutely thrilled to be here. I see an old piece of art that I put together years ago. Just made it onto Twitter.
You like that, huh? We found that. So I saw that today, and I was like, oh, we have to use that today. That is perfectly appropriate. If you're not following us on Twitter, listeners, you should be, because all sorts of fun artwork like this gem from, 5 years ago, whenever you made this, Russell.
And probably more than that. Time is flying by, man.
Very fitting out here today as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everyone, welcome to the Volatility Review, the portion of the show where we break down what the heck is going on this week from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. If you are just listening, if you're not joining us on the live, it is the backdrop for our live stream as well today. If you're not watching us over there or not following us on Twitter, it is a fun image Mr. Once and Future Dr. VIX threw together quite a while ago when he used to be a regular on the show. What was it? Aqua Teen Hunger Force? Is that what the show is called?
Yeah, that's exactly what it was. It's and we had the meatball, and I don't even I don't even know the names of the other two characters, but one of them's got a beard and kind of looks like you as a
got a sweet goatee, kind of mean looking. Yeah, kind of looks like me. He's a French fry dude, and then you're the shake guy. You're kind of the glowery shake guy. And the meatball. The meatball is just perfect for Sebastian. It just captures his essence perfectly. So, yes, it's a great image. I'm sure Russell will retweet it so you can find it over there as well on Twitter. So lots of fun to be had on the show today, listeners. That's good, because if you're a bull out there, maybe not the most fun to be had in the market. Of course, what are you complaining about? You had an over 1% pop yesterday, about 1.3%. So you're giving back about 0.5% today. You're still up over the last couple of days heading into the weekend. We're still coming back down towards that 4,100 level that, everyone was talking about yesterday. We kind of blew through it, got all the way up to, looks like around 4160 or so. So well north of that 4,100 level, coming back down today, right around 41 and a quarter, a little bit below it now. S&P off about 23 handles, a little over 0.5%. The Dow off, closing in, I should say, on about 0.6%. And the NASDAQ off nearly a full percent, about 0.9% right now. So a little bit of red on the screen, again, heading into the weekend. We'll see if this is just the head fake and then we whipsaw in the other direction, or if we take a pause now and then keep selling off. We've seen these types of patterns play out many times out there in the past. Either way, we're seeing our old friend VIX Cash hanging out a wee bit lighter than it was the last time we were talking 2 weeks ago now. I believe the Rock Lobster said on Option Block yesterday he wouldn't be surprised if we saw a 17 handle going into the weekend, and that's pretty much what we saw out there, and we see right now, actually, 1790 as we're coming into this segment. That's down almost 0.75 of a point, about 0.7 from where it was 2 weeks ago. We got as low intraday as a little bit below 17.5, 1745. So I'm not sure if I'll have to check, but I'm sure our producers have already checked. But I'll have to see if anyone had a 17 handle for our 2 week out crystal ball. I'm thinking the answer is no, but you never can tell out there. Of course, the day is young. We could be at a 23 by the end of the session. Who knows? VVIX at an 86, actually going the other way, ticking up about 2 points from where it was 2 weeks ago. And VOLQ, a.k.a. the at-the-money vol of the NASDAQ 100, 21 and a quarter, down about 0.5 point from where it was this time 2 weeks ago. So net over the last 2 weeks, we haven't really done a heck of a lot. We're not sitting that far away from where we were the last time we all gathered here together on the show. In between, of course, very different story. Did a heck of a lot of living. But net, we're right back down to a little bit below where we were this time 2 weeks ago. All right, around the horn we go. Let's start in the NASDAQ hot seat. Mr. Rhodes, sir, what was catching your eye this week from a vol trading and trending and analysis perspective, sir?
Well, it seems like that I guess for months, if not a couple of years now, everybody keeps saying VIX is not doing what it's supposed to do. But whenever we're getting weakness in the equity indexes, like we are right now, VIX is, it's not really reacting. And as long as it's not reacting to the upside, and people don't seem to be overly worried about the little blips that we have as we continue in somewhat of an uptrend, I'm staying long. I've always say, even if you don't trade VIX, you should pay very close attention to what VIX is doing if you're involved in the stock market. And actually, I'm long NASDAQ futures, so I'm paying more attention to VOLQ than VIX. But the lack of reaction leads me to believe that we don't have a whole lot to worry about, and we're not in another banking crisis, and earnings are going to be okay, and everything will be fine by the end of the year, and maybe even we'll be friends with China again. I doubt that last one, but I like everything else I said.
You're putting your wish list together. We'll see what we can get there.
No,
by the end of the year.
I'm fine if we never get along with China again. So,
Russell aiming for World War III here. That's what he's looking for. That'll give us some vol. If you're looking for some vol, there we go. That's the path to it, listeners. Let's keep on rolling. Let's get away from the impending apocalypse. Let's go instead out to a place that's always happy. It's the dark and stormy shores of Maine, where we are joined once again by the rockingest of lobsters. Mr. G, sir, what's catching your eye out there? And are you as pessimistic about the future of vol, perhaps, as Mr. Rhodes?
I have to say, I love Russell. I like it when my outlook agrees with Russell's outlook. It gives me the warm and fuzzies. And by the way, I believe you tried to twist his peaceful Chinese world peace view into some sort of diabolical ending.
I would never do such a thing.
You're twisting somebody's words. I have to say, I almost think that should be the new tagline for the Options Insider Radio Network. Come be a guest on my show, and I will twist your words however I see fit.
It is the prerogative of the hosting chair to interpret as we go through the show, sir. That's my function.
And nobody interprets quite like you do with the verve and the panache that you put into your interpretation.
You will fit my narrative, damn it, or I will hang up on you.
So, so as an old floor trader guy, and of course Russell as somebody who's looked at VIX more than anybody really should, and still be a sane person. Like when vol ain't going up, and when you remember this, Mark, like a lot of volatility is the whip. When you're trading, you're making markets or something. like you jack the vol up when you think things are going to whip. Like we're going to trade down and they're going to whip higher. Or we trade up sharp and then we're going to whip lower. Most vol doesn't come from just sort of one direction forever. Although it will pull skew and stuff like that. But generally you don't get like, that one, of course the one direction is just a crash like during the COVID times or something like that when there's no end in sight to the direction. Most times there's usually, some kind of end in sight. And I think right now I agree with Russell. Like, okay, the market we've rallied for the Fed said whatever they're going to say. I mean, they've been wrong for 3 years on just about literally everything. Now they're saying, hey, we could have a recession. You know what everybody's thinking? You guys are wrong again. Like, hey, did you forget you just spent $600 billion to basically give banks a handout to, if they needed insto liquidity? So, when the Fed does stuff like that, I have to say, it's not normally bearish stocks. And I do give the Fed credit in the fact that, prolonged recessions and prolonged depressions were always caused by lack of credit. Banks had the money, they just didn't want to, loan it. And this is always the Fed giving them the kick in the butt, like, hey, so it's kind of weird though that, because they're trying to raise rates. And ultimately, I think the end result is they're just going to charge the U.S. government so they don't spend so much, or at least if they spend, they know it's going to cost. And nobody's saying that out loud, so that's probably what the reason is. But for the most part, the economy seems to be doing okay. There's still a zillion jobs posted. I don't know if you need a job, come to Maine. Literally, there are more ads for people to work in manufacturing, putting in cable, being like a cable dude that services the house, restaurants, you name it. There's more help wanted ads on local radio here than any other ad by far. It's not even close, except when it's election season. Then we hear all the annoying ads. So, and I think that's like people coming back to work after COVID or businesses never really were able to restaff well. So I think that's a positive. But if traders aren't seeing 4,300 anymore in SPX, which I think rates going up is definitely going to dampen earnings, then like where's the vol, right? Where's the upside catalyst that's going to make the market really move? And that's what freaks people out. It doesn't mean it can't move intraday, right? But even that vol is much lower. Like realized vol for the SPX is like 11% 10-day. And that's not going to do it. VIX is already 1761. The May future is already over 20, or right around 20 at this point. And you got 10-day vol is 10%. So there's already some pretty good premium, and as we've talked on this show a lot with people, it's all relative. If SPX isn't really producing those daily moves, premium is already pretty expensive. And if you're buying protection, it's very expensive, especially if we're not really moving down. So yeah, I like that. Okay, be long some VIX calls and be long the underlying. Even be long some calls in SPY. They're not super expensive, although the volatility is 13% or 12% right now. I'm just looking at some. I mean, if you want to be that aggressive, I'm more interested in the name vol than I am in the broader index, being basically long calls broader index. But that's the condition we have. And it could change next week. It always, everything can change, but that big upside move, like the Qs have driven us all the way to where we are at this point. And the banks rallied a little today, but you're not, there's not the upside catalyst. So I think a big part of at least half of what volatility has been over the last 2 years feels like it's out of the picture. And that should make, at least see some at the money vols a little lower. And I think that's what we got right now. So, and you're right, but nobody's really worried about the downside anymore. I was just looking at the price of a May 25 put in VIX. I think is around $1. Now, also don't forget though, it's 7.5 points out of the money at this point. But
you just said put. You meant call.
Oh, you're right, Russell.
I was going to say it's pretty cheap for that May 25 put. I may pick up some of those.
All right, the 25 puts for, but yeah, you definitely want to buy a few of those.
I was looking at the exact same option when you said that, and I was like, what?
Yeah. So yeah, and I just picked up, like, I bought a straddle in VIX. I bought the May 20 puts, and I bought the 25-35 call spread for $2.25. So I can actually buy a strangle that's in the money relative to cash. And like the whole thing is in less than the intrinsic value. So historically, when I've done that, it's worked out pretty well. Because like usually what happens is that puts end up paying, as dumb as it sounds. And you end up with some call spreads for nothing or for a credit. But when vol gets that low and vol starts to get that low, it's like, okay, but that usually means we're going to actually see a lower VIX. And I know it sounds nuts because it's already at the low, but that's generally what has, at least in my view or my recollection, what's left of it. That's usually what happens.
Yeah, last time I questioned that strangle because I kind of thought maybe the puts would be all right and then the calls would go to die. And it ended up, I think, worked out the other way. I think the calls paid off last time. So yeah, sometimes those can be surprising. Speaking of surprising, Mr. Rhodes, I think you've been surprised at how much has come from that question you received from our pro Q&A back, I believe it was the end of last year, it's back in December, where one of our pro listeners asked you how you would trade for and prepare for a potential spike in VIX over the coming 6 months. That was back in December. We're all the way through to August now, and it has been just the gift that keeps on giving from an analysis and from a trading and content perspective, sir. So I know today is actually your roll day. So catch us up. How has it been going and what are you up to today?
Well, it hadn't gone all that well, but we never got a VIX spike. And you know, when you try to put something on like this, you try to do it where it's not gonna do too poorly. I did tweet out the link about a half hour ago to the most recent write-up on it. The most recent write-up was somewhat public knowledge that I was in a pretty bad accident about 6 weeks ago. So I wanted to keep up with it, but I was very brief. I'll do a much better job writing it up this weekend after we talk through the rolling transactions. So the idea initially, the question was, if on the pro Q&A, which I love doing, I'll do it anytime you want me to do it. Your listeners give me great questions. They make me think hard. I'm usually pretty exhausted, but it's a good kind of tired after I'm done with doing that. And the question was, it was the first week in December. If you think there's going to be a VIX spike anytime between now and June, how would you go about playing it? And typically, my favorite trade along those lines are to sell a put spread, take in some money, and use that money to buy a call. And I initially used the December options, and then on December 8th was when this happened. And then the following week, which is the Friday before December expiration, that's when I always roll my positions. I don't tend to hold them unless the intent is to hold them to maturity or to settlement. But that's when I generally roll these types of things. So it's Friday, and it's roll day where we get out of the April version of this trade, which is short the 23 put, long the 19 put, and also owns the 26 call, which is basically no bid, and is short the 33 call. So to get out of it, I think the only way to trade out of it is just to trade out of the April options there. And I put this trade on for no debit or credit right at even, was something else that I shoot to do. It looks like right now, live on the radio or on the podcast, we can sell the 19 put for 80 cents and buy the 23 put back for $4.50. So it's going to cost you $3.70 to get out of this trade. This has gone very, very poorly this time around. The running P&L was a loss of 39 cents from the previous four legs on this thing. So now the running P&L is going to be a loss of what, 409. And looking at the May options, which is what I was doing a minute or two ago, and I was looking directly at that 25 call. I think for the May version of this trade, with the futures right around 21, I think I'm going to sell the 20 call, the May 20 call. It's $1.55. And I'm having to write this stuff down because I want to make sure I do the right numbers. So I'm selling the 20 put. I may have said call there. I'm going to buy the 17 for 20 cents. So I got $1.35 to spend. And for $1.35, I can buy the 23 call. So there you go. And I'm not gonna sell anything above that. When VIX is relatively low like this, and there's a nice spread between the future and the index, I'll tend to just go ahead and buy a call. Last month, as I mentioned, it's long. It would be long the 26 call and short the 33 call. That's just because VIX and the VIX futures were at a much higher level. So the May lag, selling the 2017 put spread for $1.35 and using that $1.35 to buy the 23 call. And again, if the future and the index get up to the low 30s, I'm cashing the sucker out.
Yeah, that's your moment in the sun.
And for one little thing, for full disclosure, we did have that happen, but it was for only like 9 or 10 minutes. And my feeling was there's no way I would have actually traded out of that. That I just wouldn't have had the time to get it done. And then I looked at the quotes because VIX was moving, the spreads were pretty wide. It really wouldn't have been much of a profit anyway. So even though the letter of the law is, this would have worked a little bit. I think you would have made about a 250, and it would have gotten out. But in reality, I just don't. It was a Monday morning when that would have happened. I just don't think in the first 9 minutes of the regular trading session on a Monday morning, I would have been nimble enough to get out of that trade. So we're stuck in it still.
Look at you being realistic with your analysis and your fill. You're supposed to say, no, I would have hit the exact top. Oh, yeah. I would have worked it and actually sold the offer and all the other things everybody on Twitter says all the time out there. But I should point out, this was not a trade that obviously we put on because we said this is a good trade to do. This was asked to us. I think even at the time we said, I don't know if we really agree with that outlook, but hey, this is one way you could do it. And so I'm glad you mentioned that, Russell, because I know someone's going to bring that up. Wait a minute, we did kiss 30 ever so briefly. Yeah. But as we've said many times here on this show, listeners, it's 9.9 times out of 10. When you get those upside moves, they are minutes, not even hours that they last.
Yeah.
It's so short-lived. It's really challenging to get out of this stuff, which adds to the challenge of having any sort of vol upside these days. I'm sure that's why Mr. Rock Lobster didn't just load up on the calls. He's selling calls against it, got other stuff against it, because in this environment, you can't. It's too hard to make that upside just straight pay off in and of itself. But intriguing stuff. Thank you for that update. I think our listeners, I'm not sure they were expecting you to keep it going all this time. So I think that's just been a treat for them. So I'm sure they appreciate it. I will talk to them later today on the pro side. And so I'll be sure to convey their thoughts to you. So I'm sure they're enjoying it as we keep on. I'm sure all of you out there as well. You're not even in the pro. You're getting all this analysis. So look at you folks just basking in the glow here. Let's keep on rolling. Let's see if we can bask in some futures glow out there. And I guess you can if you're really into futures going down, because that's pretty much what we had over the span of the last couple of weeks. That whole curve kind of lowering, as you might expect, and that front portion coming in quite a bit. And when we kicked off the show, that April future was down not quite 2 points, but pretty freaking close, about 1.8 points out there. The May future right behind it, 1.5 points. So that front portion of the curve moving almost in lockstep. Mr. Rock Lobster, sir, what's catching your eye out there in the vol surface this week?
Oh, well, we have a very normal looking curve relative to the option pit fair value calculator. I did the highly scientific thing when VIX was at 12, and we ran a regression about where the futures, the forward vols kind of sit when VIX is at. And then we say, okay, we took an average and called that sort of fair value, or the long-term average of where VIX is, or the VIX futures lie when kind of all those forward values are stacking up and the futures are stacking up. And as we stand right now, the front end, April, is about in what I would call a normal place for where we are in the curve. The May is a little pricier relative. June, July, all those. So there's still, I would say, the way it sets up is the short term, not expecting much. You have a 9-day vol down to 1430. The May futures 2055, and then July is like 23. So that's like 9 points of vol premium from July, purchasing July to the actual underlying vol, or actually, I'm sorry, implied 9-day implied vol on the VIX calculation, which is a pretty big premium. Historic, it's a good number. That's solidly expensive. And I think part of the reason is, we got whatever's going on still. So the market has not there hasn't been as big a press in the back end. There's no rush to sell that quite yet, but everybody's kind of running out in the front end. And I think that might have a little, maybe somewhat to do with the 0 DTE stuff, because it's like instant gamma when you want it. Like, it's so amazing. It's like, boom, I want instant gamma. Boom, I can get it anytime I want. And for that reason, like a 10-day vol is not moving, it's not as exciting anymore. The 0 DTE stuff. It will be interesting to see how it trades if the realized vol gets into the single digits again. How the 0 DTE and the SPX trades. Obviously, there's still lots of fun stuff to do in there, because you can still spreads and flies and stuff like that for positive theta, but positive contract. But at least for right now, the curve is just setting up like, hey, we don't expect a lot to happen anytime soon. And that's kind of like, it can happen next year. It can happen 3 months from now, but we don't feel like it's happening today. So I think it's a very normal looking curve for where a volatility is. But again, we're coming from the 1775 from higher to lower. And normally, when we see a lot of times we're at a lower vol and boom, it trades higher and you have a different kind of curve shape because the back end is much lower. So right now you still have a back end that I would say is, no, they haven't totally pulled the plug on vol out there yet. So I would say that is the one thing to keep an eye on. But for the most part, you still have pretty juicy premium relative to underlying movement in the short term back there. So it's something worth keeping an eye on. But that back month vol is not really, the short-term vol is certainly dropping rapidly as we speak. Like 1437 9-day, I think that's the lowest number of the year. I want to just check and make sure my data is correct, but I'm pretty sure that's what it is. I got to just look one more time. I know it's definitely on the lower end. If it's not the low tick, it's very close to the low tick, especially for this year. Let me see here. Pulling up the chart, and then, because I just did this and I'm like, okay, for the last year, we are at the lowest 9-day vol in the last year. Again, anytime vol gets to that low, it's always significant now. Right? It could always pop. But you can't have lower vol without making a lower number first. That's the way it works. So we'll see if that keeps up. But again, all the vols, all the realized vols, everything is starting to come down from what were near historic numbers like 6 months ago. So I don't know. I just read what the numbers say, and that's what the numbers say. So I'm going back on the Russell train here. Like, hey, not really worried. So what do we do? We're not worried. We kind of go up. That's what we got.
Mr. Rhodes, same question for you, sir. What are your thoughts on all things vol surface this week?
Andrew just really summed it up quite well. It's
did kind of crush it there. I'll give him his flowers when they are due. He kind of crushed it.
Yeah, but the curve. If I were writing another VIX book, I'm not writing another VIX book, but if I were going to do so, and I wanted to say, here's what kind of the normal, Alfred E. Newman, what me worry curve looks like, that's what we got right now. It's just a little bit, maybe a little bit of extra juice in the future, in the May futures, but not a whole lot. It's just nothing. It's like there's this giant disconnect between news and what the market tells you. And I always believe the news over the talking heads on CNBC, or I always believe the numbers over the talking heads on CNBC. So
speaking of
nothing to be worried about here.
Speaking of the numbers on the futures side, they are pretty robust. The numbers, of course, in from our friends over there at OCC. And first off, the moment we have been anticipating for a while, can we possibly do it? Can the options industry as a whole actually put up over 1 billion contracts in a month? I mean, can even get close to that is kind of just ridiculous when you think pre-pandemic, we were sitting around 3 3/4 to somewhere around 4.5 million contracts. And now we're talking about a potentially 1 billion contract month. It just seems absurd. And yet actually happened in March, listeners. For the first time ever, the options market puts up 1 billion. In fact, 1.1 billion contracts. It's up 12% from the previous March, and also obviously the highest, most active, busiest month in the history of the business. So just crazy times there. But you drill into those numbers, what also stands out is the fact that the VIX futures, which have been pretty much a disaster post-Volmageddon, post the death of XIB, they never really recovered. And during the height of the pandemic, where single name options volume was lighting up the tape, the VIX futures continue to be a dark spot. They continue to be down month after month, year over year. It really seemed like nothing could really boost this product. Now, March comes along. Apparently, all we needed was a bit of a banking crisis, because VIX futures up 35% year over year. That's a huge jump. Now, obviously, you're starting from a pretty low baseline, but still 35%. So even the VIX futures can pop in a month like March. Mr. Rhodes, you're a former exchange guy. So first off, put on your old exchange hat for a second. Did you ever think we would get to 1 billion contracts in a month, let alone this quickly, sir? And then B, what are your thoughts on the VIX futures finally getting a little bit of life back in them?
Yeah, well, the first one, no. I really never would have guessed that number. And, I always guess high numbers on everything, which has been my habit on this program forever and ever and ever. Even if you had told me that they were going to start trading daily, index options, which has been a nice driver of a lot of this, I wouldn't have thought that would be enough to push us up to the numbers that we're seeing right now. But more power to the industry. And it's nice to see that the VIX futures are sort of getting back in the saddle. I don't know if you mentioned the kind of negative number, but average daily volume for the VIX futures year to date is down still in 2023 versus 2022. I don't remember which months were the most volatile months in 2022 off the top of my head, but I do think it was the first half of the year versus the second half of the year, so that might have something to do with it. No, I never would have guessed that we were going to hit the kind of numbers that we're hitting right now.
Yeah, these are just astronomical numbers. Obviously, you're right, that 0 day playing a bit of a role in that. And yeah, the VIX futures, I mean, they're still not, the problem is not solved. Everyone thought SVIX would be the thing that would come along and that would really turn things around again. It hasn't really worked out that way, but intriguing stuff nonetheless. Let's keep on rolling now. Let's get on into the vol options. Before we go to the big VIX mothership, because he's joining us this week, it is time to kick off Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
I love it. I know you love it. One more time, listeners.
Now, Russell's Weekly Rundown.
Always brings a smile to my face.
Me too. I just love it. Although, and the best part is, that music is probably a decade old at this point. And my daughters were, I think, 8 and 10 the first time that they heard that. And the 10-year-old said, I just don't even want to be associated with that. And she continues to say that every once in a while when I mess around and play that. just to get it, for some reason, it really bothers my kids. And that was our goal.
Kids. I told our people, I said,
that's why we have
give
kids.
Me something that will really anger preteen girls. And it worked.
And it worked. And now it's upsetting the teenage girls. Weeklies. What happened? Kind of some interesting trades. Monday, somebody came in and bought 500 of the May 2nd, 22 calls and paid $1.58 for them. And also on Monday, a couple of bullish trades here. Somebody sold a put spread. They sold the April 26th, 21 puts for $1.55 and bought the 19 puts for 43 cents, taking in $1.12, hoping that maybe VIX climbs back up above 21 by a week from next Wednesday. I'm going to skip the Tuesday trade because there's some interesting stuff around it. So I normally go daily order, but I want to loop back to the Tuesday trade because it's the one that's kind of worth talking about. On there was nothing good happened on Wednesday. On Thursday, somebody bought 480 of the April 26th 20 calls for $1. And Friday, today, somebody bought 2,000 of the May 3rd 20 calls for $1.30. Sold 2,000 of the May 3rd 33 calls for 17 cents. I do like that 33 line because that really is about as high as the VIX and the VIX futures got for any sustainable time last year. If we say that we're still in kind of the same market environment. So 33 call, if there was more juice in that 33 call, I would have sold the 33 call against the trade that I talked about a little bit earlier. So now what I found a kind of fun trade, and this one was on Tuesday, midday. VIX was at 1912, and somebody came in and sold 1,000 of the April 12th 30 puts for $11. And they, with less than, we're all about dailies, with less than 24 hours to settlement, they put this trade on. Trade does okay if the VIX settlement, the VRO for this past Wednesday came in above 19. It did not. It came in at 1857.
I was going to say that trade makes me nervous.
That trade, and it was an opening transaction too. The open interest was like a couple of dozen on that line.
Like we're always telling people on the show,
it had to be an opening trade.
We're always telling people on the show to stay away from that settlement. This guy's just diving headlong into it, right?
Well, hey, look, there's 12 cents. All right.
What's the worst that could happen?
So I hope that it was in combination with something else, and I've been thinking about that one since I scribbled my notes down about an hour ago. I can't fathom. Maybe they were short VIX futures as well. Who knows? And they did something to lock in between them. That would be the same as doing 100 of the VIX futures, right? 100 versus 1,000. Yeah. So maybe I'll go looking through the tape and see if anybody traded 100 of the April 12th futures at the same time. But yeah, I thought it was interesting, and I love it when we have an idea of how the trades turn out. Very often we talk about all these trades, and it's difficult to track what happens with them. This one was real easy to track, and that's that for that. We need an outro music.
we do. But
if we ever go to video, I want little dogs in tutus dancing around when this music comes on.
Or how about these Aqua Teen guys just dancing around? That's always that's a fun visual.
They're too hardcore. We gotta have something really,
probably have to do
some circusy.
That's true. We have to do some licensing work with that as well. But yeah, this guy's just playing settlement roulette pretty much. He's just like, hey, let's just spin the chamber and see what happens. The complete opposite of everything we've always said to do here on the show. But hey, to each their own. That's what makes a vol market. Let's get on out to this market, listeners, because we're already coming up against it. We've had a lot of fun here on the show already here, listeners. I haven't even gotten into big VIX options yet. A lot to parse on the show this week. VIX coming into this start of this segment here. Looking all right, 571,000. Nothing to sneeze at out there. It's probably going to hit its ADV of around 756, which you will notice is down substantially, down 111,000 contracts from the last time we gathered here together on the show. That's not exactly surprising. I was saying that the last time we were together on the show, that ADV threatening 900,000 in VIX, that's pretty difficult to sustain. VIX is not putting up nearly 1 million contracts a day. So inevitably, we're going to come away from that, barring some cataclysm out there in the markets. And we did not see that. So the ADV coming in understandably. Looking at the overall top 10 in VIX land right now, it's still 8 calls to 2 puts, been hanging out in that shape for a while there. Number 10 cost you $161,000 to break into the top 10 right now. That's our first of 2 puts, the April 18 puts. Number 9, $166,000 of the April 35s. Number 8, the second of our 2 puts, $177,000 of the April 21 puts. Number 7, $182 of the May 24s. Number 6, $207,000 of the May 30s. Number 5, $220,000 of the April 25s. Number 4, $253,000 of the May 50s. 5 O's. Is that our friend 50 Cent? If he is, he's still hanging out, listeners. Hasn't gotten the heck out of Dodge. Number 3, $271,000 of the April 30s. And then number 2 and 1, still hanging out. Russell's favorite trade. Number 2, $438,000 of the June 40s. And number 1, nearly $500,000, $488,000 of the June 30. So that June 30-40 vertical still on for size. We've debated whether that second tranche of volume there is selling, is fading the spread. I think it is. So it is possible that spread is actually on 2 ways at the moment, which is kind of interesting in and of itself. Getting out to the paper today, like we said, 571,000 contracts on the tape today. The big dog today, about 36,000 of the April 24 calls, followed by 29,000 for number 2 of the June 15 puts. Number 3, 25,000 of the April 22s. Number 4, 21,000 of the April 18 puts. And number 5, 19,000 of the April 19 puts. Yesterday was the banger day of the week. Almost a million contracts, getting back up over that ADV level, 916,000 contracts to be precise yesterday. So pretty big day yesterday. The big dog yesterday, we had 66,000 of the July 60s. Intriguing, followed by 65,000 of the of the October 47 halves. So interesting top 2 there. Number 3, 50,000 of the April 17 puts. Number 4, 40,000 of the April 21 calls. And rounding out the top 5 on a pretty action-packed day, 37,000 of the April 18 puts. Wednesday, just a tick under 600K on the tape. The big day, the big dog, I should say, 45,000 of the April 21s. Number 2, 33,000 of the April 25s. If it seems like I'm rushing, listeners, we got to keep on rolling with this stuff. Number 3, 30,000 of the May 75s. My goodness. Getting back to that fun paper. Number 4, 27,000 of the April 20s. And rounding out the top 5 on Wednesday, 25,000 of the April 18 puts. Once again, Tuesday, another banger day, 828,000 contracts on the tape. The big dog, 92,000 of the August 21 puts. You like those, listeners? Aug 21 puts. Intriguing, followed by 45,000 of the Aug 24 puts. So maybe a bit of the old 1x2 put spread. I'll have to pull that up if I have time to see if that's interesting. If that is the case, 1x2, 24 puts versus 21 puts in August. If you're doing that, you go all the way out to August on the 1x2 put spread. That makes me a little bit less. 41,000 of the April 19 puts. Number 4, 30,000 of the May 21 puts. And rounding out the top 5 on a pretty action-packed day, 26,000 of the April 18 puts. Monday, kind of the meager day of the week, 284,000 contracts on the tape. Not much to speak of, so we'll kind of just roll past this one and keep on going out here to get in some of our ETF friends as well. SVIX 1780 when we kicked off the show, up about a little over about 1.1 points from last show 2 weeks ago. Not a lot of volume on the tape, only a couple hundred contracts when we kicked off the show. The ADV also moving in the wrong direction, 1250, down about 250 from our last show. So SVIX not looking like it's putting up a ton of numbers out there. The big position out there in SVIX right now, 1,500 of the May 8 puts. I said we're at a 1780, so May 8 puts. Intriguing. UVIX, when we kicked off the show, 13.5 as well, down a little over 2, about 2.1 points. Decent volume on the tape today, actually. 5,600. The ADV is 6,600. That's moving in the wrong direction as well, down 1,600 from our last show. So UVIX needs to be moving in the other direction. The reverse split didn't do what I think they wanted it to do, and they're already back down to 13, so going to have to reverse split this thing again. Not worth breaking down the top positions here. It's not much paper open there. UVXY, same deal, 410 when we kicked off the show, down almost half a point, about 0.4 of a point. Doing decent paper, closing on 100,000 contracts. The ADV is 250, though, so that's kind of light. And that's down 39,000 from our last show. The big position out there in UVXY right now, 47,000 of the April 4 halves expiring today. So good luck to those folks. They were looking good early this morning. Let's hope they overwrote the hell out of those. Yeah, again, a heartbreaker of a product that this is. Hopefully this reverse split comes in soon. We can talk about some real stuff out here in UVXY. And rounding out our ETF rundown here, we got VXX 41.5 when we kicked off the show, down exactly 3 points. A decent day today, 25,000 contracts on the tape as of the start of the show. Let's see how that's improved since then. We've got 29,000 now, so a little bit more, not a ton. The ADV 37,000 though, that's moving in the wrong direction as well, down 10,000. Even though they reverse split, this thing has given up over 10 points since reverse splitting. So certainly making me look at it again. The big dog out in VXX right now, 31,000 of the April 43 puts. All right, Mr. Rock Lobster, I just banged through all that stuff. What's catching your eye in the big VIX options or SVIX or UVIX or UVXY or VXX? Pick your poison, sir. Have at it.
I think the biggest thing, we did see some larger spreads going up. Buying some of that crazy upside, like buying the 60s, selling the 45, something like that today. So I would say it's like more upside spreading that was going on. And also some of these dopey little puts are starting to trade. Like the 16 level puts are starting to perk up a little bit of buying action. But, you know, they're coming to life. Let's just say they're coming to life. So I think that's, it's hard to believe that we haven't really seen anything close to a 16 or sub 16 settle in a couple years, but that's what we have. So, I mean, the fact that 16 puts just are, don't move or barely move. I'm long some SEP 16s for my average price is 20 cents and the market right now is 18.22. So, but it's hard to believe, like those SEP puts, there's very little, that long-term vol again has not really lit the fires on the downside as far as that goes. But we can see, we can see if vol goes lower. It's possible. It is possible.
And I looked while you were talking here back to that put spread, and it was a 1x2 put spread. It looks like they bought one, sold two of the AUG 24-21 put spread, 45,000 by 92 times. When you look at the premium, you can see why they did it. They did it for $1.91 on the 21 puts and $3.85 on the 24 puts. So pretty much even money on that spread. You like that, listeners? 1x2 all the way out to August. I don't like doing my 1x2 put spreads that far out, but hey, to each their own out there. Mr. Rhodes, we covered a lot of ground here, sir, and we're coming up against it. What caught your eye amongst all these various products? And hey, do you like that 1x2 put spread in August? AUG 24-21 1x2 put spread, sir.
I have no clue what they're thinking with that.
Yeah, I don't love that. I'm trying to be charitable here and come up.
No, I know, and I told you guys I was going to be grumpy old man today when we were chatting right before we turned on the microphones. On Wednesday, and I think this may be what Andrew was referring to. Somebody did like a July, like a 1x4 in July, and they did the same thing in October with different strikes all at the same time, where they, gosh almighty, they purchased, it looks like they sold the October 27 calls, bought the October 47.5 calls, and then also bought the July 33 calls and sold the July 60 calls. And they, on those purchases, they bought 15,000 of the July and October 33 and 27 calls. And they traded 60,000 of the October and July 47.5 and 60 calls together. And I keep coming across trades like this, and I feel like somebody's doing something that's like a box spread, and they're using VIX for this. But I just haven't been able to back into it yet.
I think you've been hypothesizing that for a while, the VIX box spread. I've yet to see it, but hey, we've seen many crazy things on this show over the years, so nothing surprises me anymore, including apparently the levels of vol, because let's get to it now, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. Listeners, the portion of the show where we attempt to predict what the vol gods hold in store. And, doing this 1 week out, that's challenging enough. When we throw the extra wrench in of having to do it 2 weeks out, the future's fuzzy, listeners. As you could tell by today, all of us across the board were firmly in the 20 handle. The meatball was actually the highest at 24.42 for VIX. I was at 22 3/4. Kevin from NASDAQ was at 22 1/4 for VIX. Obviously, we are nowhere close to that, so there are no winners today. 17.5, actually 17 3/4 now is where we're pretty much hanging out in VIX land. VOLQ towards the end of the show, 21, about 21.10. So no winner chicken dinner for us here on the show. That means, Mr. Rhodes, you weren't on the show last week, so you get the pride, the dubious honor of going first, sir. What are you feeling for this time next week from a VIX and VOLQ perspective?
Well, first off, I want to correct you. You said there are no winners today. Your listeners are winners today.
That's true. They get a fun show today. That was a fun one.
Mr. Grumpy goes to sleep and Mr. Happy comes back.
Yeah,
You said you would turn that frown upside down by the end of the show, and you have both effectively done that. So VOLQ hovering around 2106. I'm going with what's next week? I'm going with, you're going to love this, 23 1/4. And I'm not going to give you my logic behind it. And then VIX, I'm just going to say 1850, a little bit higher. So there. I'm just going quick because I know we're running up against time as well.
Yes. So what was the VIX again?
VIX 18.5.
18.5. I started writing a 2 handle for you. I will delete that now. 18.5 for Mr. VIX. Mr. Rock Lobster, I'll give you a choice. I'll be generous. You want to go next or last?
You know what? I'll go next. Russell said what? 1825 VIX?
He said 18.5 VIX, 23 1/4 VOLQ.
Did he? 1850.
Okay. And hold on. What's the VOLQ? Okay, I got to look at VOLQ right now because that's a new.
It's just over 21 right now.
Okay. All right. Yeah, the VOLQ, I have to say, I don't feel like there's going to be a lot of variation. So for VOLQ, because we have earnings and all the Q stocks the week after, I'm going to say that's going to be the same. If not, it's going to tick up maybe, let's call it 1 point. So I'll say VOLQ a little higher. I'm going to say VIX though, from where it is today, I'm going to say 25 cents less. So I'm going to go 17.25 for a low close of the year. 17.25 VIX.
Dang, and what was your VOLQ again?
My VOLQ is going to be up 1 point from where it is currently, just on the
22.
Kind of vault lifting up. Yeah,
so 22.10. You want 22.10 or 22 even? I'll give it
22.10. We'll go 22. I'm add the hook just in case.
Add the hook just in case. All right, so I get to go last here, listeners, after not a great performance in my 2-week prognostication. Let's see if I can turn it up here. And yeah, they are coming for vol. Usually I'm the guy who says maybe a little bit more vol on the screen. I can still go that way, but there's not a lot of arguments for it. And if I am going to go more vol, not a ton. Russell's already at 18.5, so kind of looking where I was kind of feeling somewhere in that range. So tell you what, I will be generous. I will go above him, give him some breathing room. I will say 19.05 for VIX. And VOLQ, depends on that spread. It's kind of was tightening up there, widening it out a little bit right now. I'll say VOLQ going to be, that puts it probably close to a 24. So I'll say 24.25 for VOLQ. All right, everybody. That is going to do it for the show this week. Remember, if you're on the pro side, then you got a heck of a lot of content coming at you. We'll be doing good old options oddities in a little bit here. So stay tuned for that. We'll put some fun stuff in the live chat back in a bit for options oddities. Then immediately after that, you guys have been bugging me forever to do a pro Q&A. We're going to get it today. So stay tuned for that. A lot of you have already hitting us up. Some of you with epic treatises. So I look forward to this. But before we do that, let's go around the horn. Mr. Rhodes, as our guest, sir. If you're working on anything you want to plug, have at it, sir. The floor is yours.
Oh, I'm still putting things out on a Substack periodically. I'll write up what we talked about today. I'm in the process of of leaving EQ derivatives and venturing out on my own. Next week, I'm actually going to be introduced as the director of research for a financial firm. And I might be developing some strategy-based VIX ETFs.
Look at you. Well, if you do that, sirs, make sure whenever you reverse split them, make a meaningful reverse split. Don't give me these like 5-point reverse splits. I want serious business.
I got kids about to go to college, so I got to go out and make some money.
I want 10x. I want 10x reverse split. That's all I ask for. Is that too much to ask for? I don't think so.
I will run. You know what? You know what we'll do if we do have to split it. I'm gonna let you do a Twitter survey, and whatever everybody tells us to do, we'll do.
That gets dangerous. They're gonna say 1,000 to 1, 1,000 to 1 reverse split. They're gonna want Berkshire Hathaway numbers for it.
Yeah.
All right, check them out. You know where to find them on Twitter, listeners, at Russell Rhoads. 2 S's, 2 L's, RHOADS, all one word. Lots of fun to be had there. And Mr. Greasy, I almost called you the Greasy Meatball. I apologize. And Mr. Rock Lobster. Where should folks go if they want to check out all your vol musings?
You go to option. I just had visions of $100 vol products circling in my head.
Wouldn't that be nice? Let's just think about that. Just let that run through your head for a little bit. How fun would that be?
It would be quite fun.
Why can't they just make these nice things happen for us?
Yeah, exactly. Well, I couldn't pick a finer man to come up with those products than Mr. Russell Rhoads, Dr. VIX. It's a good job for him. Optionbit.com or Money Map Press now. You could go check out my weekly profit cycles using VIX and SPY in combination. So if you want to learn how to do anti-correlated trading to the market, you want to pick up that skill, you could, of course, at Option Pit, we do it just about everything. Everything we do has vol component in it. Or also, if you want something specific like that at Money Map Press, check it out. So there we go. Those are your 888-TRADE-01 for Option Pit, though. But if you heard vol views, you get 10% off if you want to buy anything there. So if you listen to this show and want a goodie, ask Ted or Andrew, and they will give it to you.
There you go, listeners. And of course, you know where to go to get all of the content Kevin and the team over there are working on throughout the week. It's easy to find. It's just NASDAQ.com. You've heard of it. You know it. You love it. Head on over there. A lot of great insights. Sign up for their options newsletter as well. A lot of great content coming out of that on a regular basis as well, including some stuff I do believe from the once and future Dr. VIX. For all of you on the on-demand side, that will conclude your broadcast week with us. Thank you for joining us throughout the week here. We love having you folks out there driving up our bandwidth bills. Literally couldn't do it without you folks. For all you folks on the pro side, hang out. We'll be back in a little bit. If you want to join the pro, you want to get all this stuff, you want the party to continue with a double header, a banger today, theoptionsinsider.com/pro. And however you get at us, have a great weekend. Stay safe out there, and we'll see you back here next week. Another episode of Volatility Views.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, NASDAQ proudly launched the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the NASDAQ 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched NASDAQ 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on NASDAQ's full suite of index options products at www.nasdaq-100-options-NQX-NDX-VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.